Vince McMahon, the CEO of the WWE, had to step down on misconduct allegations, which sent the share prices collapsing. But is this an opportunity to pick up the company on the cheap? Well, that's what we're going to cover in this video. So guys, smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up, guys, and welcome back to the channel, where the goal here is to help at least 1,000 people achieve financial independence much sooner. And let's dive right into it. So you can see here, the WWE was down 9% on the news. And what exactly was the news? Well, you can see here, WWE's Vince McMahon steps down from his CEO role amid misconduct probe. And his daughter, Stephanie McMahon, has now become the interim CEO of the wrestling company, as they have hired outside counsel to assist with the investigation. And this actually just gave me a little bit of a chuckle, because as you can see over my shoulder here, this was a magazine for WWE magazine. When I was younger, like middle school, early high school, I used to have a subscription to WWE magazine. And back then, WWE recently acquired their #1 competitor, which was World Championship Wrestling. And so it was all one company. And then they ran a storyline where the children actually bought the business from under Vince McMahon. And so you had these interesting magazine articles that came out. And one of them was of Stephanie McMahon lighting Vince McMahon's portrait on fire, saying that, you know, she's now taking over the whole company. So it's really funny how life is now imitating art, where Vince McMahon is kind of going down in flames, or at least his reputation is, with this probe, and Stephanie McMahon has taken over the company, at least in the interim. So a bit of a chuckle, but obviously it's more of a chuckle on just the link between those two. It's not really a chuckle on, you know, people being harmed or Vince McMahon's reputation being destroyed. Like, I want to be sensitive to that, at least. And so moving into the article, the Wall Street Journal reported that the WWE board was investigating a secret $3 million settlement the longtime CEO agreed to pay to a departing employee with whom he allegedly had an affair. The board has hired outside counsel to assist with the investigation, and Mr. McMahon will retain his role and responsibilities related to WWE's creative content during this period, but will surrender his CEO and chairman duties until the investigation has concluded. And so the point that I'm making here with the words "nothing changes" is that nothing really changes. So long as Vince is control of the creative, Vince is in control of the company. And just going back here, you can see in this last little sentence that I have here that Vince has pledged to accept its findings, whatever they are. That, to me, sounds guilty. But that's just all alleging here. I don't have any additional information. I'm following what's in the news, so we'll see how this plays out. But timing is very important here, because I still follow the WWE. I still watch the product every now and then. But something interesting happened. Last month, Stephanie actually stepped away from her duties at the WWE. So it's very interesting that she's coming back now. So you can see here, Stephanie McMahon had actually stepped away from her role as WWE's chief brand officer last month, stating that she wanted to take time to focus on her family. And we all thought that that was a little bit peculiar, because it's just weird that she left her post that is now coming back so soon. I think that there's more to the story as to why she left, because here's the thing, and a lot of people don't know. Her husband, Paul Levesque, who was a pro wrestler back in the day and a big heel or bad guy for the company by the name of Triple H. He wrestled the likes of Stone Cold Steve Austin and The Rock. He drove main storylines as a villain against those two sort of like hero characters. But see, here's the thing. Her husband is a C-suite executive of the company, and so is she. So if she's taking time away to spend with her family, well, where's the family? Well, the family's still traveling with the company because Paul is still working. And so it was just a very unique and interesting explanation as to why she stepped away. We all knew that there was something more happening to the story, and so it's very peculiar that this story now breaks. And the other thing that I wanted to point out is that Vince McMahon not being in the CEO or chairman seat is not that big of a deal. And here's why. There's one name that's most important to the organization, and it's not Vince McMahon anymore. It's a guy by the name of Nick Khan. So you can see here, WWE President Nick Khan helped the company generate record revenue last year, with most of it selling content rights. That includes a 5-year exclusive agreement with NBC Universal's Peacock streaming platform in 2021 that's valued at approximately $1 billion. The company also has TV licensing agreements with Fox, NBC Universal, and this is the big one. They've recently secured its first standalone international distribution deal with Disney Plus Hostar in Indonesia. And the company's deal with Hulu, which streams WWE's flagship brand, WWE's Monday Night Raw, is set to expire later this year. Walt Disney Co. holds a majority stake in Hulu. It's very likely, in my opinion, that the biggest cash cow for the WWE will be exclusive streaming rights of their TV properties on Disney Plus. Now, I don't know if that happens. I don't have enough background information, but I think that that's the direction that they're going. And just going back into this exhibit, I made a point here that at Berkshire, Buffett gets all the credit, but Ajit Jain does a lot of the heavy lifting. It's a similar story at WWE. Vince gets all the credit, and he should, but the real heavy hitter, at least recently, and their real CEO, in my opinion, is Nick Khan. The WWE is just fine if Vince steps away and only handles creative. And to be honest, if they let Paul Levesque, formerly Triple H, run talent and not Vince, the company would likely have a better on-screen product. So effectively what I'm saying is if Triple H handles the creative and Nick Khan handles the business side of the business, even if Vince McMahon is not affiliated with the company anymore, I actually think overall they have a better product. So that's sort of what I'm thinking about this company overall. And just diving a little bit deeper into that contract that paid out $3 million, the separation agreement bars the now former employee who was hired as a paralegal in 2019 from discussing her relationship with Mr. McMahon or disparaging him. The board's investigation began in April and has unearthed other older non-disclosure agreements involving claims by former female WWE employees who allege misconduct. The board's inquiry was prompted by a series of anonymous emails that were sent this spring threatening to reveal the $3 million settlement between Mr. McMahon and the former WWE employee. So this is not good. I don't think personally that Vince McMahon ever comes back to his CEO position, especially because it seems pretty legitimate. We'll see how this sort of plays out. I don't know how it's going to fall out, but just the way everything's happened, it seems like there is a lot of credibility here. But once again, I'm not making any allegations. So overall, what does the company look like to investors? Well, you can see here that the WWE is a very well-run business with a very wide moat. They have very low debt. The company is inflation resistant. They do have a very strong economic moat. But the one thing that I would point out is that their stock-based compensation is greater than 10% of their free cash flow. So they're not necessarily as shareholder focused as I would like to see a company. And my target is usually less than 10% or approximately around 10% of stock-based compensation of free cash flow. Now, the other thing that I wanted to point out is that you can see here that their revenue is still growing at a very healthy clip. You can see that the media is expected to grow at around 6% a year. Their live events, I do believe, are going to continue to grow out. I think that the live events could slow down if we have a consumer-led recession, but I don't see that necessarily happening to the WWE because people still go to their events even during recessions. Their consumer products are expected to grow at around 6% as well. So overall revenue is expected to grow at that level. But I do believe that revenue could absolutely jump with the announcement of that new Disney Plus deal if it ever happens. But the one thing that I do want to point out is a lot of people think that this company is not growing anymore because fewer and fewer people are going to the live events. Oh, to contraire, notice how the significant majority of their business is through the sale of media and content distribution. This is a content business with high gross margins. And in the content-hungry world that we are in right now with Netflix, Disney, and Amazon fighting for content, WWE is a huge winner in this environment. And we've seen their content on multiple platforms. They have content on Netflix. I haven't seen content on Amazon yet, but obviously they have content on Disney. So we'll see how this plays out. I think there's a fight for WWE's content for a long time from now. It is a huge viewer generator still, even in this post WWE Attitude Era environment where all of their best performers have left. They still have a lot to offer. And what exactly are they doing with that cash that they're generating? Well, you can see here, they are paying down debt and buying back shares. So this is an indication that they're becoming more and more shareholder friendly as they return that excess capital to shareholders. And exactly how much excess capital do they have? Well, you can see here that they're approximately sitting on $200 million of excess capital. And so that's what I mean about they have low to no debt. They actually have no net debt, and that's because they have all of that amount of cash sitting in their short-term investments and just in their bank accounts. That can absolutely cover that short-term debt that they have. Now, where am I valuing the company? Well, you can see here that I don't think WWE is selling cheap. Using a terminal multiple of 15 times earnings, which I think might be a little bit low. You might want to use a 17.5 times multiple, but I'll use a 15 times multiple. You can see that I'm valuing the company at around $39 per share. The excess cash that I just showed you is approximately $2.50 per share. So I'm valuing them at approximately $42 per share. The current share price is $62 per share. So it's trading at 50% greater than its intrinsic value. I think that there is some fallout that could pressure the share price further from new news released on this whole investigation thing. So we'll see how that plays out. But right now, I don't think the WWE is a value investment opportunity. And if you want access to that WWE model, the tracker, and all the other models that the Patreons get access to, you can get access to that at the lower Patreon tier. And once again, like I always say, there's zero risk to you, because if you decide to try it out and you decide that it's not for you, no problem. Message me before you cancel and let me know that you tried it out and it wasn't for you, and I'll fully refund your first month's subscription amount. So once again, zero risk to you. That's how much I believe in the product and the research. And the WWE may not necessarily be an opportunity, but I actually believe that Microsoft is an opportunity right now, and it's a company that a lot of value investors, super investors I would say, are buying up right now, or at least bought up a lot of in Q1 of 2022. And you can get to that video where I explain all of that right here.